Listen up. The world's a mess right now, and no one's telling you how brutal that chaos feels when you're trying to move money, make bets, and protect capital. Interest rates? A complete nightmare. 1 minute they're heading up, the next, everyone's screaming they'll crash back down. Uncertainty? It's not just a buzzword. It's the monster keeping you awake at night, making you second-guess every move. And if you don't get this right, you're not just losing profits, you're losing your edge. Macro funds live in this unrest, and if you think you're going to play it safe or follow the herd, you're already on the losing side. Here's the brutal truth. Macro funds don't wait for clarity. They don't care what the headlines scream tomorrow. They're not guessing. They're hunting for patterns nobody else sees. They profit by exploiting the gaps, the cracks between what the market fears and what the real risk is. They aren't just reacting to rate changes. They're anticipating how governments, central banks, and global politics twist and turn, pressing every button that shocks markets and rattles players who are stuck in yesterday's logic. If you're stuck waiting for signals or consensus, stop right now. That's a death sentence. Instead, zero in on the mismatches, where the market prices risk wrong because it's driven by panic, noise, or outdated info. Get aggressive tracking the hidden motives behind central bank moves. They don't just raise or cut rates. They send coded messages about their pain points, their fears, their blind spots. The smart macro funds read that. They trade not the obvious moves, but the ripples that follow. Now, here's what you need to do. First, throw away standard playbooks. Look beyond simple rate forecasts. Dive into credit spreads, yield curve twists, and currency flows. These are where the truth hides. When a central bank signals tightening, it's not just about inflation. It's about who gets squeezed first and hardest. Identify that pressure point before the rest of the market reacts. That's how you hit the jackpot. Next, embrace options like your life depends on it. They're not just a hedge. In uncertain rate environments, options become your weapon to build asymmetric risk. You want to profit when volatility explodes or collapses unexpectedly. Buy those steep volatility trades on rates, currencies, or inflation expectations. If you do this right, you're not just surviving the chaos, you're commanding it. And here's something most miss. Global interest rate moves don't happen in isolation. Politics, fiscal crises, trade wars, they warp everything. Top funds don't just watch charts. They watch headlines and political signals to see where uncertainty is building and then target their exposures there. The next shock isn't where everyone's looking. It's always where no one wants to look. That's your edge. Don't fool yourself thinking this is easy or widely understood. It's brutal work, constant vigilance, reading between every line of data and noise. But if you master this, you build something unshakable. A portfolio that not only withstands rate chaos, but breeds outsized profits from it. So stop whining about how impossible it is. Stop sitting on the sidelines waiting for answers the system won't give you. Get ruthless about the deep dive into the real drivers behind those uncertain global rates. Hunt volatility, exploit central bank confusion, bet against overrated safe trades, and always look for what no one else dares to see. This is how macro funds win. This is how you take control when everyone else bends the knee to fear. Nothing else matters. Get ahead, get focused, or get left behind. Subscribe to our YouTube channel and check the featured link to discover more.